Okay, so once again, I'll just go over sort of my association with Best Choice. I first met Pete Hoyt and the Best Choice people at the Money Show in Vancouver. I think that was approximately 2001. In 2003, I think they had Canadian stocks in Best Choice, so they had added Canadian to the database, and at the time we had to have 80% of our RSPs in Canadian stocks. Since then, the Canadian government has seen the light of their ways, and there's a lot of people that say, we want you to make as much money as you can. If you can do better trading American stocks, that's fine. So they have no restrictions on RSP content anymore. Okay. Anyway, when I first bought in 2003, it didn't have anything about options on it. It was just strictly selecting high growth stocks, and very shortly thereafter, Pete created the options, the seasonality part of the program. Okay, so the first thing that I sent out to Pete that seemed to impress him was I had a list of 25 options trades that I had done using Best Choice seasonality, and 22 of the 25 that I did were triples or better. That means I spent $1 and made $3. It doesn't mean I spent $1 and I had $3 of profit. It just meant they went from $1 up to $3. Okay, so 22 of the 25 did that. And I didn't realize at the time that I'd be starting a significant and profitable relation with the software and with Pete. Okay, so they invited me to come to San Francisco in October of 2007. That was right about the time that the market was starting to roll over. So there was a whole bunch of seasonal stocks, typically retailers that typically do well in September and October. And in 2007, they didn't work. So I was in things like Gap and Coach and things like that, that all of a sudden started to roll over. So instead of making money on the seasonality that time, I think I wound up losing money on most of my positions. And at that time, I talked to the Options University crowd that had come to this meeting there in San Francisco, and only 2 people in the room. There was probably about 200 people in this room of Options University, and nobody in Options University is taught how to make money trading options directionally. Okay, so I was quite surprised when I asked how many people had had a triple or better in the last 2 months or something like that, because I had had something like 6 triples in like a 3-month period, and I had a return of 1,000% as well. So I was really surprised that all these people that were learning how to trade options didn't seem to know how to trade options directionally. Now, at the same meeting, we had a Best Choice meeting, and I asked the same question at the Best Choice meeting, and I think 4 people put up their hands. And then I went a little further. I said, well, how many of you have had 5 trades that tripled or better? And some fellow at the back of the room puts up his hands. And so I asked him how he'd managed to make 5 triples or better in the last little while. And he said, well, remember that talk that you gave earlier for Best Choice? I just took that list that you had created and I traded it. And that's where I got all my triples. So all I'm trying to say is these things tend to repeat themselves. Okay, and I'm sure a lot of you are aware of the Netflix trade that happens in January, the Google trade that happens in October. So those things keep repeating themselves. This is the first year, I think, I remember in the last 10 where the Netflix trade didn't work on earnings. And believe it or not, I actually had told people in my online workshop that I give to not take the Netflix trade this year just because I didn't think the risk reward was very good. Okay, in 2008, that was in March, I gave a talk to Best Choice owners in Bradenton, which is the headquarters of Best Choice. And I told them at that time I was short Bear Stearns. I had bought the 75 puts for $1.40. Ultimately, they went up as high as $70 because Bear Stearns went from approximately $80 down to $5 in the course of about a week and a half. Okay, the thing that was a kicker was I actually only sold them for $14. So I made a 10 bagger on them, but I could have made a lot more if I'd held some. So if I was doing that same trade today, I probably would have kept a few and sold more. So I probably would have kept about 8. I think I traded 20 contracts, so I think I would have probably kept 4 contracts and sold 16. At the time that I gave that talk to, I asked people in the room how many people were long the market, how many people were short, and I think over 75% of the people in the room said they were long the market. This is in March of 2008 when the market had started to roll over. So there was a rally in 2008, but all indications were that we were starting a bear market. Okay, so that was another thing that made me a little bit leery is how few people actually seem to be able to read charts and tell me that the market was rolling over as opposed to people that had long positions and were maintaining them in a bear market. In 2009, in April, I gave another Best Choice sponsored talk in Fullerton, California, and at that time I gave people a list of 60 there were 60 tickers that I had found on my scan using Best Choice, and I gave them a list of 14. One of the stocks at that time was Tech Cominco, TCK, and it had gone, after I had talked about it, I think it hit a low of around $2.40. At the time that I scanned it was somewhere, I had bought it somewhere around $4. I wound up selling it around $40. And I think of the 14 tickers, the lowest return over the next 4 months was 60%. That was on a stock called ISLE. That was a casino stock. Thank you. I've got my tech person here just helping me out a bit. That's Chris. Anyway, of those 14 tickers, I think the lowest rate of return over the next 4 months was 60%. All 14 were winners. And I think 2 of the stocks, including Tech Cominco was one of them, I think 2 of them were up over 1,000%. So one of the things that always concerns me when I see people using Best Choice is that they don't appreciate what the software was created for in the first place. So Pete Hoyt, to me, was the real instrumental force in my trading development because he had created this tremendous tool, Best Choice, that allows you to find things that have phenomenal growth rates. And now it's just a question of learning how to trade them so that you can take advantage of them. So I think Pete was getting returns annualized in the neighborhood of about 70% a year, and he did it just trading stocks. He didn't trade options. Anyway, in April of 2009, when I gave that talk, the market had started its move up, and again, it's been in a bullish phase, and since those March 6 lows in 2009. Okay, so this is a typical type of chart that you'll find on Best Choice, but this is for a stock that's going down. This is Valiant Pharmaceuticals. How many of you are familiar with Valiant Pharmaceuticals? Canadian company. It's been in the tank for almost a year. It was over $100 at one time, as you can see there, and it's currently, it started to actually have a comeback, so it started to rally, and to me, any time that Valiant rallies, it's just to stay on your toes to look for an opportunity to short it again, because it's got a very bad story behind it. So it's a stock that I would continue to short whenever it got an opportunity. Okay, so anyway, I didn't realize that it was having earnings back on March the 14th after the market, I think it was. Okay, and at that time, the VRX 60 puts were selling for $1.30. So this is for a stock that's been really beaten up, has had just a terrible history. How many of you would put a flyer on something that's just had a really bad history for $1.30? That means if you buy 10 contracts, you're putting out $1,300. How many of you would put out $1,300 on a bet on Valiant Pharmaceutical dropping over the next few days? Anybody? No, you wouldn't? Valiant? This is Valiant Pharmaceuticals. It's a stock that's really been beaten up. How many of you would buy something like the 60 puts and pay $1.30 for them? Okay, well, if I'd been paying attention, knowing that the earnings were coming out, definitely would have put $1.30 on, okay? Not much to lose and tremendous, to me, downside potential on it. Okay, so you can see what happens. Where's it wind up at the end of the day on the Friday? It basically closes around just under $27. So if you bought 60 puts, what are your puts worth on the Friday at the close? $33. So you just spent $1.30 to make $33. Okay, so when I see things like this, I just kick myself because, I mean, these opportunities like this happen over and over and over again. Okay, and you can see how it broke support there, so that red line support. So how would you play this move? You just buy some 60 puts and you just let it run. And if you feel you want to get out after it's announced earnings and the earnings aren't very good or the report's not very good. Okay, anyway, if you look at the chart, this to me looks very similar to the chart that I had on Bear Stearns back in March of 2008 when I gave the first best choice workshop that I'd given. Okay, and I paid how much for Bear Stearns? $1.40. What were they worth 2 weeks later? $70. Okay, so do these kind of opportunities happen very often? Did anybody else know about Valiant Pharmaceuticals? Paul, did you know about Valiant? So are you looking for opportunities in Valiant? But it makes sense, right? I mean, are you willing to risk a little bit to make a significant amount? And at $1.30, I probably would have bought 20 to 50 contracts. I don't know. It depends how confident I am that it's likely to drop down. Okay, so what other stocks recently have been in the headlines for tanking or having bad news? Anybody hear about CMG? Okay, so there's the chart on CMG. What did it do after that? It really tanked. It took out the lows there, took out support. Right? So again, CMG was one of those stocks that was very similar to Bear Stearns, like Valiant Pharmaceuticals. Okay, and again, a lot of people say they don't do shorts. So I just wanted you to be aware that you can make a lot of money shorting in this market. Macy's was very similar, right? But now it's making a comeback, yeah. Okay? And then what were oil and gas stocks doing in 2015? Same sort of thing. So you just wait for an opportunity to short them. I mean, I made a lot of money in 2015 shorting oil and gas stocks. Right. Anyway, you can see the kind of chart. You can see the decay rate there on best choice comes out as 80%. So I'm usually looking for things that are like in the 70 to 90% range. I've even seen things that said 100%. Okay, but again, you can see it's going from where? Top left to lower right. Okay, so when things are going up, you're looking for lower left to upper right. When things are going down, you're looking for upper left to lower right. Okay, so these are the main types of trading that I do because people ask me this fairly regularly. Oops, sorry about that. So first of all, it's breakout from low volatility. Tomorrow, Dan's going to, I think Sunday, Dan's going to talk about one of his favorite setups and one of my favorite setups. And this is also a setup that Jesse Stein looks for. Okay, so we're looking for breakouts from low volatility. And again, if you follow Tyler Bullhorn's work, this is something that he looks for as well. We're looking for a situation where there's very low volatility, and then all of a sudden you get unusual volume or abnormal volume breakout, and you get price action accompanying it. Okay, the second thing I trade continuation plays in high growth stocks, or if you want to look at the other side, it's continuation plays in high decay stocks. So I'm just giving you some examples of things that have high decay rates. So in 2008, it was Bear Stearns. There was a bunch of other ones too, like Lehman Brothers, like Morgan Stanley, things like that. You can find these stocks that are having really bad news and really bad reports. Oil stock that had really bad news. What was it? This was BP. What's BP? British Petroleum. They had a lot of money shorting British Petroleum by buying puts. Okay, so if you pay attention to the news, you can find these, and they're very profitable. Okay, and then tomorrow I'll talk a little bit about just trading the market after a big spike. Okay, so for trading breakouts, I want to see low volatility, and I use something called the squeeze, which is a study that's available on Thinkorswim. I look for volume signatures, and Keacher and Morales created pocket pivots. And then also I look for trend strength. And again, there's quite a few measures of trend strength. So David Elliott looked at mobile bands. There's also the ADX lines. So when it's above 25, it's usually showing some strength in the trend. And then the other thing I looked at is the CCI 50 zoom area. So again, when the CCI zoom is above 100, it's usually an indication of strength. Now, if you go into best choice, you can find these things over and over again. So I'm going to give you some examples of those in just a minute. Okay, in continuation, I'm looking for breaks above resistance. So again, you can look for breakouts, and Darvis created Darvis boxes for trending stocks. We're going to look this weekend at snapbacks. So again, David Elliott created his CCI, and again, I'll talk a little bit about that. And I'll also talk a little bit about big spikes. But again, I'm not going to go into a lot of detail there tonight. I wanted to try and show you how to use best choice. So Gary was talking about February the 11th. Again, if you look at the charts, the NASDAQ actually started to turn on February the 9th. That was when it hit its low. And the S&P hit on February the 11th. Last year, August 24th, there was a big reversal day after that, and September 29th. And I'm going to show you what I was buying on September 29th. Okay, so what I found interesting was on September 29th, I was buying Priceline, which is a very high-priced stock. And again, I bought Priceline for a very specific reason on September 29th, which I'll try and show you in just a minute or two. But it was interesting, my friend Jeff Scott also bought he was buying stocks on the same day on September 29th. And a few other fellows that I trade with, they also did a successful trading. So most of the people I know that aren't as successful trading, they weren't doing anything. In fact, they were petrified on September 29th that the world was coming to an end. Okay, so why were we buying then? Because number one, I thought it was a good low-risk entry point, and number two, it looked like that was a good area of support. So we started seeing things that indicated that that was a support level. Okay, so again, you have an opportunity on these kinds of days to make significant gains. Again, I tell people not to try and time bottoms, but if you can find a bottom that's at a support level, then it makes some sense. Okay, and then William O'Neill talked about fall 3 days. After landmark day, you want to find tickers that have explosive growth potential. So best choice, I think, gives you a really good tool for finding those. And tomorrow we'll be showing you how you can use EdgeRater to do the same thing. Okay, so we'll talk about things that are in play, and we'll be able to look at growth rate and price consistency. Okay, and there's also landmark days in bear markets, and this is basically you'll hit a high and it'll be a lower high, and then it'll roll over again. Okay, so you can also find landmark days and downtrending stocks. This was a scan that I did 5 trading days after February 11th. It was on February the 18th, and then you can see the scan I did 27 days after the low. And these were just for tickers that had significant moves. Okay, and I took this list and imported it into Best Choice. Gary showed you how to import earlier. Okay, and this is the weekly. So these were from all tickers, and this was just from the weeklies. And again, you can see quite a few of these that appeared 5 days after the February 11th lows, also appeared 27 days later. So they still were performing well quite a few days after their original breakout. This is DDD that came up on the FinViz scan on March 31st. So you can see up here I've imported the list from FinViz of tickers that were up over 30% year to date on March 31st. Okay, so you can see this is the kind of stock that I'm looking for. What do I like about this stock? Anybody in the room have any suggestions? Okay, so the first thing I like about it is going lower left to upper right. Okay, so the price consistency is very high. It's 98%. So it's got very low volatility. Chris, do you have any idea how I can turn the video off for this fellow? I'm sure he doesn't even know. Usually shows yeah, there was a little video. Oh, there it is. That must be Tony. Thank you. Is this being recorded? Yes. It'll be in the, I'm not sure what I'm going to do because this is supposed to be available for everybody. Maybe that's not Tony. I think that is Tony. Tony? Tony, can you hear me? Tony? Are you Tony? Probably not Tony. Okay, how do I turn this little blip off here? Show Adobe Reader. Okay, anyway, the other thing that's really important about this chart is that it has a very high annualized price growth. So you can see it's over 5,800. So again, if this could keep doing this as long as it has for the whole year, you would make 58 times your money. So if you started out with year with $1,000, at the end of the year it'd be worth $58,000. That's basically the premise, and that is a measure of
ginger. How do you do it?
Grate it on the stuff and put it in hot water, but be very careful because it's stained.
Yeah, Ron. Yeah, I think it was Ron. Yeah. Okay, that seemed to work. What happened there? I got rid of that by just moving up here. Okay, anyway, so we're looking for things that have high annualized growth, which is cool. Okay, so anyway, the biggest challenge is to find these things earlier in the run. And again, tomorrow we'll show you how we can do that with a scan. And I've talked to Jerry and I've talked to Gary, and they've promised me that you will be able to scan for these types of stocks. So after the first 5 or 6 days, the annualized growth on that is over 1,000%. So you can see it pretty much follows the trend line for the first 5 or 6 days. So if you just look at this section down in here, it's actually going up for the first 5 or 6 days, and then it takes off after that. Yeah, the other thing you'll find interesting is a lot of these things that have had significant growth, they actually started their runs before February the 11th. So if you look at the silver stocks and the gold stocks, they were actually moving before February the 11th. So again, a lot of times when there is a rotation in the market, you'll find that you'll have things that are moving before the February 11th low. Okay, so in 2009, Chipotle, Priceline, and Amazon were all moving in advance of the March 2009 lows. Okay, so they had started moving in January, and then the market itself started moving in March. Yeah, so the Russell was moving independent of the rest of the markets, right? Yeah, but what's that? There could be if it continues, but again, there seems to be quite a bit of resistance. So if we move through resistance, that would be good. Yeah, usually in a bull market, your transports will indicate that people are buying things and you need transports to carry them. And people's aversion to risk lessens, so they're prepared to buy cheaper stocks. Okay, this is a stock that we discussed. Some of you, anybody here at Orange County, you weren't this year, right? Okay, anyway, this was a stock that we discussed at Orange County. And again, if you look at it in the first 6 or so trading days, it had already showed up. I think Chris did a scan for it, and we found this on his in-play template. So again, if you look at where it was on March 4th, it was somewhere in the neighborhood of $8, and you can see it closed. It's gone up as high as $11. So again, it's gone up about 37% just in a month and a half. Okay, so again, if you look at the price growth percent, it's over 4,000. You look at consistency, it's over 90%. So again, these are the kind of stocks I want to trade. So, you know, when Gary's showing me a chart of Amazon and the price consistency is like, I think it was 25%, and I show you a chart of something like this or DDD, which do you want to trade? Do you want to trade something that has price consistency of 90%, or do you want to trade something that has price consistency of 25%? I'm glad somebody said that, because I sometimes I think maybe I'm crazy or something, you know, like I'm missing the boat on something, like maybe I'm not seeing something that everybody else sees. Okay, so those were just some charts of price growth and price consistency, and again, I'm hoping that you can appreciate that price growth and price consistency are important in making decisions on what you're going to trade. And for some reason, I see people want to trade things that are all over the map, and you have very little predictability on what they're going to do. Okay, so these charts go back in time somewhat, but again, I was going to give you some exercises to do, but just not going to have time to do it. So I'm sorry, but you'll just have to listen instead of do, and I prefer you were doing. So those people that are coming this weekend, which is most people here, will spend a lot more time doing things instead of just talking about them. So there's a chart of Apple from 2009 to 2012. This is a weekly chart. You can see it was in a trend, and again, within the trend, you have different moves. So one of the things I wanted to show you was a Tyler Bullhorn video. So if you go onto YouTube and just put in Tyler Bullhorn and look for trend lines, there's a very good video he did on trend lines. So you can see that it's on best choice. This is a trend line here. This is a trend line on top that I put in. Okay, and if you looked at best choice, you would have seen this trend line here until this move happened. So if you go back in time and look at Apple Weekly, this trend line was in place, and then it disappeared once the price starts shooting through the trend line. Okay, anyway, this is not uncommon here. You have this channel, and again, once you've established 3 points on the channel, so there's point 1, there's point 2, there's point 3, then you can make quite a bit of money just trading this channel. So our trend line is important, absolutely. And can you trade off of them? You buy at the lows, you sell at the highs. So just imagine what would have happened in this little area here if you had bought calls and then sold them at the top of the channel. If you got to this area here, you buy at the bottom of the channel, you sell your calls once you get to the top of the channel. Okay, so does everybody understand that, how to use trend lines? And again, you don't get these kind of patterns all the time, but certainly last year on Priceline, I got this kind of chart, and I'm going to show you that in just a second here. Now, when you do get these breakouts, it's not unusual for you to get reversals. So basically, Apple went parabolic there in 2012, and then when they go parabolic, it's not unusual for them to come crashing down back to the trend line, which it did. I can put anybody to sleep in this room, I know it. Okay, this is a chart of silver, a weekly chart again, and again, there was a trend line which I've put in yellow that was on best choice, and then it broke the trend line. So again, when it breaks the trend line to the downside, you want to be getting out, so you should put your stops in below this yellow trend line. Okay, and then we create another trend line, which is here, and then we break that trend line to the upside. So basically, this is a pattern that I really like to see and made a lot of money trading silver in 2010, 2011. This breakout also came out of a squeeze. So again, I told you how I like to trade setups where you have low volatility, which was happening to the left in this chart. We had this breakout here. We had a trend line established, break of the trend line, continuation. This is a shallow retracement. And then a continuation. Now again, if you look at the continuation, what happens? You establish a trend line here on the bottoms. The trend line starts getting steeper. The trend line starts getting steeper. Okay, what's happening in silver? It's going parabolic. When it starts going parabolic, you really want to be careful. You have a doji up here on a weekly chart. This potentially is what kind of chart that John Person would call? John Person would call that a low closed doji. Okay, Dan is asking how we can get weekly charts in best choice. You can see over on the left here it says DWM. D stands for I'm putting somebody else to sleep. It's great. D is daily, W is weekly, M is monthly. I beg your pardon?
You gotta have a candle after, right?
Oh, okay, yeah. So this becomes a low closed doji once you've established. So right now it's just a doji, but it becomes a low closed doji if you get a close below it. Gan is saying he doesn't have that toolbar. Okay, so sometimes it'll hide here. So I think if you click something over here, it might open up. Ganna? If it doesn't, then I'm not the one to talk about it. Okay, this is Tesla, and the reason I'm bringing up Tesla is because one of the guys that's coming to the workshop tomorrow, he had a position in Tesla, And Tesla, again, it had a nice trend line. It was staying close to trend line, and then it sort of started to move away from the trend line. He phoned me up the day that it had a red candle high and started to roll over. Now, when it started to roll over, there was this huge space between the 10 moving average and the price. So when you get a big space there, you've got to protect that space. So there's two things can happen when you have a space. Those are two things can happen. The moving average catches up to price, or price breaks down towards the moving average. That happens more often when there's space. Does price go down, or does the moving average go up? Price goes down. And so it's very important when you have that kind of a setup that you protect yourself if you're in a profit position. He was up, screen's not changing. Yeah, so anyway, you know, there's a reversion to the mean. It goes back towards the 10. And again, if you look at Tesla when it started this run, on the downside, it was a long way away from its 10 as well, and it came back to the 10. Yeah. Right. Okay, so if you are having trouble with the screen not changing, one of the things you can do is apparently sign out and try signing back in again. Okay, this was a setup, and I think we talked about this in the online trading group that I have, and this was just basically sort of wedge type setup where you've got your trend line at the bottom, so you see the best choice trend line at the bottom of this chart. And actually, it did break down slightly below the trend line, but then came back almost right away. And then you had a trend line on top. So again, you're in an uptrend. You create one of these little chart patterns, and then you're just watching for a move, either the upside or the downside. Okay, so if it does break up to the outside, there's 4 ways that typically tell people they can make money trading this. So can anybody in the room tell me how you can make money trading this? And if anybody here in the audience wants to venture a guess, you can just go write it on the blackboard, or tell Dean. Dean, do you want to make some notes here? Okay, so what are the 4 main ways that you can profit off of a move here in GDX to the upside? Okay, so you have a wedge. So we talked about, somebody's talked about putting in a straddle or strangle. Okay, so that's when you're not sure which way it's going to move. So again, you can set up a buy stop or a sell stop above or below it if it does start to move, and then have some sort of action. But the straddle or strangle only works if you have a particular strategy. So what I want to know is, what is one of those 4 strategies? Anybody? Anybody here? Okay, you could buy the stock. So we're going to buy GDX if it breaks above there. What else can we do? Somebody's saying a condor. Okay. I'm going to give you very simple 4 ways that you make money if it starts to move up. Okay. Number 1 is you can sell a put spread. So you sell a credit spread. Number 2 is you can buy GDX. Number 3 is you can leverage it by buying GDX calls. Or number 4, you can leverage it by buying a leverage ETF, and the leverage ETF for GDX is NUGT. Okay, now something that acts very similar to NUGT is JNUG, which is the junior gold miner. So JNUG is the derivative of GDXJ. Okay, so there's NUGT, same sort of setup. There's NUGT a few days later. I don't know how many of you caught this, but I got in at 65. I got out around 85. The GDX calls themselves also returned multi-bagger depending on which strike you bought. This is JNUG. We talked about this. I put it on a watch list the day after it had broken out. And again, the next day it was up over 20%. So I know Dan was in this. I know I was in this. How many of the rest of you were in a gold miner or something like that? Francis was in it. The rest of you, no. Okay. Okay, what's been one of the best performing industry groups year to date in 2016? Gold miners, and I'll show you that tomorrow. Okay, here's another use of the trend line. So this was Priceline, and this was September 29th of 2015. So you can see the trend line at the bottom there. You can see the trend line at the top. Okay, so what kind of candle do I have sitting on the trend line on September the 29th when the market sold off? And so I'm asking about location there. What is the location of that candle on September 29th? Okay, there's also a Bollinger Band in there. So if you look, this is a Bollinger Band right here. So we have this candle right here at the Bollinger Band. There's also a moving average here. So there's a key moving average. That's the 200-day. 200-day lower trend line. What kind of candle do I call this? It's a green candle low. That's right. And it's at the lower trend line. It's at the lower Bollinger Band. It's at the 200-day moving average. Is it likely we'll find support there? I bought this for $1,200 a share. I bought 1,000 shares. A few days later, I was going on a holiday. This holiday cost me a lot of money because this move went from, I got out somewhere around 1280. So you can do the math on that, 80 times 1,000. But it kept going and it closed somewhere around 14. I think the high was 1477. Okay, so what's 1,200 to 1477? You can figure out how much that holiday cost me. I did. But, you know, when you come back, you're saying, God, I wonder if I should have done that. It happens all the time. The Georgia indicator, right? Okay, this is Priceline, and again, you can see that there's a trend line. Remember the trend line there at the top? There's a trend line again. What's happened to Priceline? It's broken, that trend line. Okay, so it breaks the trend line. When something breaks the trend line, guess what happens? Quite often it keeps going, okay? So yeah, you get short covering because people are expecting it to hit that trend line and fail. Okay, so there's where Priceline ultimately wound up before it had a red candle high. Okay, so again, there's the move. So I got about 80 of the 270 that it went. Okay. And if you had done an annualized growth rate on that trend there, it was over 500%. Now, probably very few of you have ever looked at trading these percent moves here, so you probably don't know what sort of percent move. So when I see something that's 100% annualized on a move, is that something that's going to be very profitable trading directionally with options? No. Okay, it starts somewhere around 400%. So when you start getting annualized growth of 400% over the course of this trend, that's when you start getting some really nice moves on your option plays. Okay, so does this identify itself early as a good mover? So if you were using an in-play template or something like this, would this identified itself as something that's moving well? Yes, okay, so it has a good move up. It has a pullback. Where's the pullback come? It comes down to this 10 moving average here. It comes up again, has another pullback. It's fairly shallow move up. Consolidation back to the 10. Whenever it gets a long way away from the 10, it usually always has some sort of move back. It's got a trend line here. What don't I want to see happen? I don't want to see it drop below that trend line. Does that make sense? I'm going to bring up best choice here and just go back through that trend. Oh, this is nugget too. So for those of you in the room, you'd probably have a hard time seeing this. I'll get it out of the way. So what you can't see here is you can't see annualized growth rate there. So what's the annualized growth rate on NUGP since these lows here? Okay, price consistency is a little more erratic, so it's been around. So what that's measuring is it's measuring the width here. So this is Bollinger Band width. So again, if the Bollinger Bands are narrower, then you're going to get a higher price consistency here. As they get wider, then this consistency goes up. Okay, anyway, you've got a really high price consistency. Is this something I want to get in? Yeah, and you have this break of this trend line here and this continuation of the upside. You see what's happened since then, it's started to pull back. I want to go back to Priceline and just show you that it did identify itself after a very short period of time. So I'm going to go back to the September 29th lows. This was the February 11th. So here's February 11th. Does anybody think Priceline's going higher here on February 11th? Annualized growth rate, is that a growth rate you're interested in? Okay, let's come back a year. So here was the move off of the lows. There's the annualized growth rate. You can see it says 499, close enough. This was the low here on September 29th. 1, 2, 3, 4, 5. There's your in-play template. Do you like things that are appreciating at an annualized growth rate of 2,600%? Can you find these? Well, again, as I said, you can find them using EdgeRater, and you certainly will be able to find them on Best Choice, I believe, as well, because Gary and Jerry said this was something they want to be able to scan for. So this will hopefully be a scan in the not-too-distant future on Best Choice. It's really hard to find them because, you know, basically what you want to have a starting point. So September 29th was the starting point. And you can't do scans. You can do it on EdgeRater, but you can't do it on Best Choice right now. So again, if we can go back 5 days from, well, go forward 5 days after September 29th, when it looks like you've hit a low, and do a scan, then we can find things that have these kind of numbers. And again, you know, on the first 5 days, 88% isn't too bad in terms of consistency. So if you're scanning for a 5-day period, then you want to have a little lower price consistency than you would over a longer period of time. Does that make sense? Yeah, I'll show it again tomorrow, for sure. Yeah, I mean, basically, you knew the low was September 29th. You had a green candle low. We did scans for them. I sent out, you know, to the people that are in my webinar, I sent out the green candle lows on September 29th. And, you know, Chris was doing an in-play scan for those. So you just look at the list of things, you import it into Best Choice, and you can see all the ones that look like they're doing pretty well. So it's not that, it wasn't that difficult to do. And again, I'm hoping I can show it to you. Okay, so that was just showing you that Priceline did have that pretty good move off of the lows. Okay, so Gary showed you how to import a list. So again, I was going to have everybody try and import a list. This is the biotext. We'll definitely do this in the workshop tomorrow, okay? But to import a watch list, you want to find a list first of all. So these are all the biotechs. You can filter in best choice. For some reason, Gary doesn't like trading stocks. I trade a lot of stocks. I started trading stocks that were in the $2 to $5 range when I started reading Jesse Stein and Mark Minervini. These are two guys that have had some pretty phenomenal returns on their investment. I don't think, I know for a fact that Jesse Stein, I don't think, trades options. He just trades stocks. He does use some leveraging, but he's had some pretty phenomenal returns. And, you know, he looks for the kind of setup. So things that move can move very quickly. And you can see this on the annualized growth rates that I was showing you for some of those stocks. So those are the kind of stocks that will have pretty phenomenal returns for you. So again, I just went through this. So again, if you get the slides, you can do this pretty quickly. So I think Gary showed you how to do this pretty well. So again, then you can take the list and you can scroll through it. Now, one of the things that I really like about Best Choice is that, number one, you can import lists. I think some of the competition, you can't do that at all, okay? Number two, you can scroll through that list very quickly. So if I have a list of biotechs, I can scroll through that. I can do 100 charts in approximately 5 minutes. I can't do that with other programs. Okay, I like the ability to go back and forth between the extremes chart and the short-term charts. I like the ability to add my own indicators to the charts. I can do it very quickly. And I like the options trader feature on Best Choice. Okay, so again, I've just put in this how to calculate moves and options. I think Gary did that. So again, this is a hypothetical setup. I would not suggest doing this, but I'm just had a target here on price line of 1430. If the market was moving, if it looked like it was going to break out, then this might be a good one. But right now it looks like we're pretty overbought and we're hitting resistance levels. So anyway, you click the options chain icon. You can see where it is. It's up in the top here. Once this window comes up, you put in show targets, you put in a stop, and then you put where your target is. I put in my target as being 1430. Okay, and then once I do that, this is the graphic that comes up. So now I can calculate returns, and it looks like the best return here was on the 1400 calls, which would go from, they're selling at 235. The bid ask is 215 to 235. And if it does go up to 1430, your 1400s are going to have intrinsic value of $30. Do you like things that go from $2.35 to $30? Absolutely. So I'm not recommending doing this right now, but you can see how I do the calculation, if nothing else. You can do the same thing on Thinkorswim. It'll show you what the theoretical value will be after the expiry time or at the expiry. And again, I just put some in here. Okay, and then as I said, the other thing I like about Best Choice is that I can combine Best Choice and Edge Rater, so I can take an Edge Rater scan. And in this case, this was for green candle lows that occurred. And again, I can do them on a specific date. So I did this yesterday. So I just looked at things that had green candle lows on February 11th. This was the list that came up. Tomorrow, Chris and I will take you through running some of these scans on Edge Rater. Okay, so does seasonality work? You want to use it as an alert system, not an absolute, so it narrows the list of things that you have to watch. You want to remember that trend trumps seasonality, so somebody has a very strong trend. You don't want to be betting on seasonality to disrupt the current trend. You've got to still practice basic risk reward. So again, I've seen people that say, well, I'm going to buy options on this move happening. If it goes against me, I'll lose everything. You don't want to do that. You still want to have basic risk reward considerations. Okay, and you want to watch market timing, just see what the market's doing, and are you in a stock that typically correlates with the market. Does it work? There's something called, I think it's Money Calendar. And what they do is they, Pete thought they were taking ideas away from Best Choice. They're using the software to create this list. So anyway, we just went through the list there. Wojtek, I think, was in the room. I think he's gone to sleep now. Anyway, Netflix has a big potential move coming up around earnings. And again, I'll spend a little bit of time on that tomorrow. So it's got earnings April 21st after the market. Okay, and these are just some of, this is one of the things I posted. That was at the end of February. And again, from this list, I think quite a few of these were up over 20%. Halcyon HK, it was up over 100%. UWTI was up over 127% for the month, I think it was. These were recent seasonal moves that we found, and again, these were all things that I recommended, and I took them strictly from Best Choice. Okay, so I'm losing Chris here. I promised him 9 o'clock. I lied. Okay, so anyway, typically moves. So you can see the returns that you've gotten in March after I had talked about them. And I think these were just taken on March 18th. So it was only part of the month, but they started coming up to resistance. So here's Mexico, here's your trend line, and it came up and hit the trend line. So again, it moved about 10%, which is a lot for a country ETF. PEIX had this nice move up. And then on March 23rd, which is when the seasonality was supposed to kick in and turn it over, it was up at this trend line or resistance level, and it rolled over. So it was quite interesting that PEIX rolled over. But you can see for the month it was up almost 50%. ALJ, not a big mover, it was up about 10%. DUST was BUST, so it didn't quite work out, but it never gave an entry signal, okay? And then this is HK, and again, you can see it was up over 100%. So that was one of the ones we picked up. There's Petrobras Brazil. So again, combination of Brazil and oil and gas was good. It was up 72% for the month. And again, I posted that before these things moved. Valero typically has good moves this time of year. So again, not a huge percent, but if you had bought some calls, those would have done well. Western Refinery, again, up about 18%. Not a huge move, but decent month. UWTI up 67%, and that was in the first few days. And the ETF, I didn't talk about it, but again, the ETF that had a really big move was the Livres Brazil ETF, which is BRZU. Okay, so again, when oil is moving well, Brazil and Russia typically move well. So there's RUSL. Now again, you can see the trend line, the channel there, so it hit the top of the trend line. So again, that's typically where I'd be concerned in taking profits. So RUSL was up 54%. BXX is seasonal shorts, according to seasonality. And again, in March, you can see it had a significant move down 25%. Again, if you're buying puts on that, you would have done pretty well as well. Okay, and I think a large number of services we're talking about BIG. So again, BIG's stock that I've traded the last few years, and it's done significantly well at this time of the year in March. Okay, why is price consistency important? First of all, because you don't want to get whipsawed. So again, if that price consistency is up over 90%, it's a lot easier to trade. If you're going to trade options directionally, low volatility is needed. If you're going to buy premium, okay, if the volatility is high, it's better to sell premium, okay? So both cases, you go from A to B. So you start at $10, you finish at $15. If you go all over the map here, the option premium is going to, that means your price consistency is 100%. Then you're going to do very well if you buy options, okay? So in this kind of scenario, you probably want to sell premium. In this kind of scenario, you probably want to buy premium. Can you measure price consistency? Yes, and Best Choice Seasonality's got some really good ability to do that. Okay, so I just put in some guidelines in trading options. If you're going to buy premium, then you either want to be buying calls when it's going fast up. And again, I tried to show you how I find things that are going fast up with good price consistency, or you want to buy puts on things that are going fast down. Okay, so if you sell premium, then 4 of the 5 things that you sell have good probability of working. And so in these scenarios, you want to be selling puts. In these scenarios, you want to be selling calls. Okay, and I just talked about you want to be an investor at market bottoms. So again, the recent market bottoms, February 9th and 11th, September 29th, August 24th. Okay, so those are the days where it makes sense to be an investor. But when you're getting to the situation we're currently in, you probably want to be more of a trader. Okay, so I'm going to turn things over to Chris. He's actually just going to give us a summary of his software, and I've got to find. You could what? Yeah. And I could do it with you, and we could do a combination, show how to import things from EdgeRater into Best Choice. Would that work? Okay, so for those of you that are in the room right now, I know quite a few of you are from back east, so what we are proposing is that we're going to do another session where we talk about EdgeRater and Best Choice combined, and that will be next week. So Chris will just give you some information on his software, and Chris and Jerry have been talking because we think there's some really good synergies between the two softwares. And I don't buy a lot of software programs like Jeff Scott does, but Chris can attest to this. I haven't been paid any money by EdgeRater to promote their product, but I did pay for it. And so I want Chris to do really well because I think his software is a tremendous asset and tremendous tool. I pay for data for Best Choice, and I paid for the software originally. So again, I don't get paid for anything that happens with Best Choice. I use it because I think it's a great tool. Okay, so again, you know, I use these tools because I want them to stay in business, and I want to be able to use them on a regular basis. So I was really glad when Jerry stepped in and bought the company, because I think Pete and Sonny were getting a little bit tired of doing the day-to-day things that were involved with the company. But again, it is a terrific software. I think Pete's created a tremendous tool for you to trade. And so before the rest of you fall asleep on me, we'll call it quits here. You don't have the slides? I did send them out. Well, I might have sent my other email. Oh, okay. I beg your pardon? They went out today? Okay, anyway, I'm going to just ask if anybody has any questions before we finish. And again, if we do another session with Chris and I, I'll let Chris start the session, and I'll finish it up with all the time that I'll finish it up with all the time that he lets me have at the end, and try and show you just how to do some of the things we didn't have time to do tonight. I would like to have you do some things where you have to do it yourself, because I think you learn program much better if you actually use it and do it than if you just hear me talking about it. So again, it's a tremendous tool. I'm hoping I give you some insight into what I'm looking for when I use it. And so I'll stop there.